Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition where we're going to be focusing on gold and the prices of gold and the outlook going forward from here. Joining in to discuss this gold outlook with me is Mr. Navneet Damani, Senior Vice President and Head of Research for Commodities and Currency at Motilal Oswal Financial Services. Welcome Navneet, and thank you so much for taking the time out for this discussion. Well, everybody is kind of getting worried because we are being hit by one event after the another, and now the markets have had to see the latest move by OPEC plus nations over the weekend, which announced a production cut of crude oil. Of course, there was a knee-jerk reaction of the Brent crude and then gold prices as well. To help us with this entire scenario, I want to start off with the basics first, to help all our viewers really understand what exactly is the correlation between crude oil and gold, and what do the current elevated crude oil prices really mean for the gold prices as well?
Well, Sakshi, thank you for having me on the show. Well, it's a very interesting combination between crude, inflation, and gold prices, and dollar is in the center of all this. Now we got to see that what is happening in the world for the last 1.5 years. We've seen higher inflation and a lot of central bank action to curtail this inflation. Now, to top it up, crude oil prices were in corrective mode from $100 to about $70. Journey has been taking probably a 1 year's time frame. And ever since $70 was breached, say probably in the last month, market participants had aggressive short positions. They started to believe that inflation would start to cool off. Along with inflation, crude oil prices are likely to correct further, which is going to be adding another cushion. And Fed will not need to jack up rates very aggressively from here on. But there has been a sudden shift where OPEC plus nations have stepped in and wanted to send a strong message to the world that they are still the price controllers or price drivers of crude oil prices globally. Short positions were aggressive, as I mentioned, and that led to a massive covering, which led to a spike of about 7 to 8% in Brent and WTI prices. And to top it up, this is all going to add to inflationary concerns eventually, and which will force the Fed to probably look towards more tapering of rates in the near future, and that doesn't bode very well for the dollar, which has been in corrective mode from 104 levels. We are seeing dollar towards 101, 102 levels, and has been positive for gold prices.
Yes, you're exactly right. And thanks for building up that context for all our viewers. We will take this one by one as well. Now, we did see that knee-jerk reaction happening. Initially, when I spoke to you in the previous interaction, when I spoke to you, you did say that you perhaps now believe that the gold prices should somewhere consolidate around these levels and then perhaps inch lower going forward from here, as there are not many triggers that could continue to push gold prices higher from here. But looking at the kind of impact that the global banking turmoil had on gold prices, we saw an 8% inching up on the gold prices last month itself. Do you think this kind of an impact can be replicated with the crude oil prices as well?
Well, the last time I was speaking to you, we were around $2,000 on the COMEX, and today, as we speak, it's around the same level. So it's not much has changed for gold. It briefly went down by about 3-4% and has got up once again because of the sudden spike in stance from the Fed, and also the jump in crude oil prices that we are witnessing. Having said that, what's the take on gold from here on? I don't think that my stance is changed, and probably we'll have to revisit the entire story. Now, talking about crude oil prices, the crude oil narrative is changing big time, and I think over the next few weeks and months, it will be very interesting to see how much the cut, what they have announced, has actually delivered. What is the stance from other global nations? Do they join hands and join the party, or probably they choose to stay away? And the underlying narrative for crude, I think, is kind of bottoming out, and probably another 5 to 10% upside from here on will not be a very big surprise.
Right. Now, what some of the experts have been now looking at is that this surprise or a shock move that has come in from OPEC Plus could perhaps further stoke inflation, like you also pointed out. And then there is this another concern of which everybody was hoping that perhaps the central banks around the world would now be looking at the peaking out of the rates and would now perhaps look at a pause or dovish stance on the rate hike front as well. But this current move could again stoke inflation, and then therefore the aggressive stance could continue, and the dovish stance of US Fed may not come anytime soon. in that case, then what happens to the gold prices if the rates continue to be heightened for a few more meetings, if we continue to see that?
Well, absolutely. The narrative actually suggests what you're saying, but I will have to wait for more confirmation whether crude oil prices are here to stay the kind of momentum we are seeing, the actual demand. Is there any demand disruption which is going to take away the sheen for the last momentum in crude oil prices? To top it up, gold prices are very difficult to time at this point in time because we are seeing a massive demand destruction around the globe. In India, we are trading at around 25 $30 discount on the domestic front. Globally, also at $2,000, the demand is not very robust. So it has to be seen that at one end, the geopolitical concerns and macros are supportive for gold prices, but if the demand is not very robust, not very great, this whole narrative will start to fade off, and
Right.
which is my fear for gold prices from here on.
Right. So, what exactly would be the key factors to consider if we have to look at the demand factor? How would you really be judging whether demand, and on what factors will this demand be really, perhaps be betting on?
Well, in case of gold, people are very price sensitive. Okay, and let me tell you, when the prices start to move up very sharply, they stay away. They choose to stay away. Only marginal buying, which are probably for marriage purpose or for say committed purposes, are to be taken care of. But otherwise, people tend to choose away to stay from gold, and which is what we are seeing in domestic market at this point in time.
Hmm.
ETF flows have been very dry over the last few months, and there has been a massive disparity between domestic ETF returns and actual gold prices on the physical side. So ETF investments are taking a backseat at this point in time.
Hmm.
Along with that, I am seeing that if at all the interest rates are here to stay at 4.5%, 5% at treasury yields in the US, why would somebody wish to opt for gold, which is a non-yielding assets? Talking about domestic, 7.5% is the current bank rate which the FDs are offering. So that's also a very big change of stance in investors' appetite. Where should they be investing in gold at 60,000, or should they be
Correct.
looking to park money in treasuries, in banks, bonds, and in FDs at this point in time?
Yes, you're right, because that's exactly what I was coming to. The investors at this point in time are quite nervous and confused as to how should they be really approaching their investments to gold at this point in time. Looking at the macroeconomic uncertainties right now and a lot of developments that you also believe that you will be tracking over the next month or so, what are you advising investors to do at this point?
Well, if you are invested, stay put. If you want to buy gold for say probably marriage purpose, you can get better entry levels. If you want to be an investor in gold, this is not the right time. Maybe say 3-4% upside momentum could be witnessed in the next few weeks and months. But beyond that, I do not see gold prices heading and sustaining well. So I would like investors to stay away at this point in time. And if at all gold prices surge about 3-5% from here, investors who are already invested can look to book some profit and look for alternate investments.
Right. So in the end, FY24 we've just begun for this entire financial year. Looking at the kind of macros that we are looking at currently, your own sense of the kind of levels that we may see for this financial year.
Well, briefly, we may head towards $2,100 also. That may be an outrageous call because we've seen that most of the indicators are indicating a gold price rally from here on 15-20% momentum. But I believe that 3 to 5% is what I see in gold prices from here. But on the downside, a 10 to 15% correction is where I see gold prices settling as we approach the end of 2024.
So in INR also, what is the kind of levels that you're looking at?
In INR terms, maybe in best case 62,000, but on the downside 55, 500 is where I see gold prices ultimately heading.
And by when do you see that 5 to 10% decline and that 55,000 coming in?
Maybe the third or fourth quarter of 2024.
All right. Well, not the best time to invest in gold. You can actually look at some attractive positions going forward from here. A lot of macroeconomic uncertainties that are at play and that need continuous monitoring as well. Thank you very much, Navneet, for being with us on this show and discussing with us all these insights about the way the crude oil prices are moving and how will that really ultimately impact inflation, the rates, and therefore the impact on gold as well, and the strategies that investors must follow as they approach these levels. Because right now we are seeing a lot of FOMO also happening happening for a lot of investors who did not invest in gold at lower prices, and they're looking at this continuous inching up at 61,500 or so as far as gold prices are concerned. But these prices may actually come down, as Navneet believes in the third quarter or fourth quarter you may see an inch down of 5 to 10% from these current levels as well. With that, we wrap up this edition, but don't forget to stay tuned on to Business Today TV for a whole lot more that's coming up on your screens from the world of business and macros as well. And also, you can continue to engage with us on our social media handles, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.
If you like the video, do like, comment, share and subscribe.